Unlike residential leases, which usually last up to 2 years, commercial leases in Oregon can span anywhere between 3 to 10 years, making it vital to get them right. Welcome back, Loopers. It's Andrew Chung with DoorLoop. Today, we're diving into the Oregon Commercial Lease Agreement. If you're a new landlord feeling overwhelmed by the prospect of drafting your first lease agreement, don't worry, we've got you covered. A commercial lease agreement is a legally binding contract between a landlord and a tenant's business, covering terms for leasing commercial spaces like offices, retail buildings, or warehouses. There are 3 main types of commercial lease agreements: gross lease, triple net lease, and modified gross lease. In a gross lease, tenants pay a monthly rent, which the landlord uses to cover insurance, taxes, and common area upkeep. In a triple net lease, the tenant covers all property costs, usually paying a lower monthly rent to the landlord. A modified gross lease combines elements of both, with both parties sharing costs depending on their agreement. It's important that your lease agreement contains certain details according to federal law, such as the names and personal information of the tenant and landlord, a description of the property, pet allowance provisions, rent amount, lease terms, rent due date, and details about the security deposit. In addition, the lease agreement should include details such as how utilities will be paid in shared properties, what repairs and ongoing expenses the tenant will be responsible for, and which will be done by the landlord, and signing and putting a date on the agreement. You also need to include mandatory disclosures such as the commercial property owner's details, the presence of lead-based paint in properties built before 1978, potential flooding hazards, and the presence of carbon monoxide and smoke detectors. Now, if you're feeling overwhelmed, DoorLoop is here to help. You can download and customize a lease agreement template from our website in Word or PDF format. And especially with our autofill function, landlords with multiple properties can prepare their rental contracts in no time, making DoorLoop the best option for your commercial leases. Or use our editor tool to personalize your commercial rental contract. Our software can manage lease agreements, collect rental payments, list properties for rent, and so much more. Book a free demo to experience it for yourself. Click on the link in the description below. Before we get to some frequently asked questions, make sure to subscribe and give this video a thumbs up so we can get this information to more real estate professionals. And here are some frequently asked questions. Number 1, when does a landlord have to return a security deposit? In Oregon, landlords have 31 days from the end of the lease term to return a tenant's security deposit. Question number 2, under what circumstances can an Oregon commercial lease agreement be terminated? An Oregon commercial lease agreement can be terminated either at the end of its term with no notice required, or if a tenant fails to pay rent within 10 days of the due date. And question number 3, how can a landlord forcibly evict a tenant in Oregon? Landlords looking to evict a tenant must follow an expedited court process known as Forcible Entry and Detainer, or FED. Well, that's it for this video. If you want to join a community with other real estate professionals, join our exclusive Facebook community with the link in the description. And to learn more about property management tips, click this playlist here. We'll see you there.